That Mitesh. Well, let's get in Dilip Bhat, market expert who joins us on the show. Hi Dilip, thanks so much for joining in. Well, I wanted to ask you about Avenue Supermarts. That's D-Mart. That's struggling in trade. If you got in the IPO, you'd still be very, very happy. But from the recent peak, it's corrected up substantially. Growth is slowing down out there. Margins are getting compressed as well, and it doesn't have valuation support. What's your sense in it?
I think in the sequence of things what you mentioned, I think the valuation is not very supportive without any doubt. And Nigel, if you see that all the high P stocks in the markets, including Bajaj Finance, have taken it on the chin, and we are seeing that all of them are struggling. I think maybe this quarter performance could have been some kind of an excuse for this small correction that we are seeing and the struggle that the stock price is seeing. But overall, I think as what we see that with the rise in the interest rates and the QT, the P's have to sober down, and which is what possibly could be one of the factors explaining why some of the high P stocks, including D-Mart, is struggling. Maybe D-Mart will recover in terms of their performance over the next couple of quarters without any doubt. I think these are just a minor blip. They will still continue to be on a very strong growth path. So overall, I think valuation is something that we should take note of, and which is what I think goes strongly against in favor of the high P stocks. That includes D-Mart.
Okay, point taken. Let's talk about PSU banks. They continue with their gaining streak. Motilal Oswal Financial Services is very bullish on the space. They're looking at an improvement in the ROAs of the PSU banks. Abhishek is here with the details. Abhishek.
Well, Rima, as you mentioned, Motilal Oswal has released a note on PSU banks wherein they are titled it the homecoming of ROAs or return on asset. So profitability of the top 7 banks that they cover, or it is under their coverage, has been improving to an estimated 90,900 crore as of FY23 from a loss under 60,000 crore that they had in FY18. So top 7 PSU banks under their coverage have delivered an average ROA of 1.1% over the 10 years, that is FY04 to FY13. This compares to below 1%, they have seen for some of the private banks as well in the same period. So they estimate the top 7 PSU banks to report a PAT of about 1.3 lakh crore, that is 1.3 trillion in FY25, which compares to a loss of little under 60,000 crore that these banks had reported in FY18. So this will drive the ROA and ROE to about 0.9% and 14.2% respectively. So adjusted book value for these PSBs is likely to grow at an average rate of 12% to 23% range versus 14% to 19% that they have estimated for top private banks. So consistent performance on delivering healthy return ratios can lead to further re-rating of the PSU banks. Their top picks are SBI, that is State Bank of India, Bank of Baroda and Canara Bank. Back to you.
Okay, all right. And of course, I mean, Abhishek, thanks very much for that. Names like PNB and others are still nowhere close to getting anywhere close to that one-time book level. So, I mean, if you believe that things are going to get better and they should trade at least one-time book or around there, I mean, there could be a lot more to go, of course, if the fundamentals continue to improve. Dilip, I'm coming to you for a view on PNB, but let's just PNB and PSU banks, but also let's bring in Sonia, who's standing by. We're going to talk about PVR. Now, that is the big one, which is selling off about 4-5%. And there is a note from Kotak Institutional Equities. They've downgraded their rating. Price target's still higher than the CMP. But what are they saying, Sonia?
The last time you went to a theatre, but it was a long while back that I did, and Kotak mentions in their note that consumer preferences are changing because of the influx of OTT and there's so much entertainment outside of theatres. The occupancy levels have fallen quite a bit. In fact, Kotak has downgraded PVR to an add from a buy. They've slashed their target price. It's still above the current market price. But what they say is that, of course, the positives are that the NCLT has paved the way for, the merger of PVR and Inox that will create a multiplex behemoth north with better bargaining power. However, the overarching theme really is unabated weakness in the Bollywood box office collections post the pandemic, suggesting that there's a major change in consumer patterns and behavior. The total number of Hindi films crossing 100 crore box office collections fell to just 7 in calendar year 2022. This compares to 17 films with more than 100 crore box office collections in 2019. Let's move to 200 crores now. Total number of Hindi films crossing 200 crore box office collections fell to just 5 in 2022 versus 7 in 2019. So there is a low tolerance definitely for mediocre Bollywood films, and that is also perhaps because of the paradigm shift that we are seeing induced by OTT, which is weighing on occupancy. So Kotak Institutional Equities has gone ahead and scaled down their earnings estimates for PVR. They've trimmed their FY23, FY24 occupancy assumptions. They've cut EBITDA estimates by about 15 to 38%. They've cut the face value by 16% to 1850, which implies a 12 times EV to EBITDA for FY24. Back to you.
All right, Sonia, thank you very much for that. That's PVR for you. It's an interesting note which Sonia highlights. Dilip is still with us. Dilip, so your views on both, but let's talk about the public sector banks and whether you think there is still more to go. Abhishek kind of put out what Motilal is saying, but what are your thoughts and what would you want to buy now in that space if you would want to?
Sure. I think as far as the PSU banks are concerned, we all know that it has already run up quite a bit because they are more or less the slate is very clean in terms of the NPAs, and possibly the credit growth and the NIMs and the NII growth all are getting reflected right now. So I think all of them are looking pretty robust at the moment, and the momentum possibly will continue for some more time to come. And which is what we can see that still, as what you very rightly said, that PNB is still far away from its book value. So there's sufficient steam. So I would say one caveat out over here, I think there will be a momentum play, yes. It will move up in next 6 months to 12 months, yes. But whether there will be a secular long-term buy into these banks, I think the principal question that still remains in the minds of everyone is whether the DNAs of the banks have changed. And that is very difficult to predict in the long run. And I'm not too sure whether the DNAs of the banks change so easily. And that is what is capping the price to adjusted book as well as the multiples. So taking all this into account, I would say, yes, we must play for a momentum for next 6 months to 12 months and possibly 15 months. But beyond that, I think taking a long-term view is very difficult as far as I am concerned. And I would say that in the order of pecking, SBI still looks the best and the safest. And then, of course, I would say that something like a Canara Bank also looks pretty interesting. But there are small banks away from the PSU banks. For example, there is, I would say, a South Indian bank looks pretty interesting. Karnataka Bank looks pretty interesting. So I think away from the PSU bank, some of these banks also look very interesting from the current levels.
Dilip, thank you very much for joining in. Motilal Oswal's analysis versus 7 PSU banks: State Bank of India, PNB, Bank of India, Bank of Baroda, Central Bank, Union Bank and Indian Bank. And amongst these, if you look at the price to book value, PNB is the cheapest at 0.6 times. FY24 price to book 0.6 times. State Bank of India is at 1 time, while Indian Bank, Union Bank and Central Bank and even I think Bank of Baroda, that's at 0.7 times price to book. So those are some of the cheaper stocks when it comes to valuations. We'll slip into a break on that note. Here is something that you, our viewers, must take note of. CNBC-TV18 and the National Stock Exchange have come together to promote investor awareness through a special campaign, Informed Investor, that empowers you to make the right decision with your money. Nothing in life is guaranteed, but many investors fall for guaranteed returns gimmick. A smart investor always avoids